Hey, every time you see a headline about $100 billion flowing into AI, have you ever actually stopped to ask, where does that money go? Actually, there's a finance story hiding underneath all of those numbers. A vast, almost invisible layer that most investors scroll right past. So today, let's go find it together. Every year the world adds more AI models, more parameters, more compute, and every single one of those models needs somewhere to run. Right now, that somewhere is being built, not just by the tech giants, but by a decentralized network of hardware operators, bandwidth providers, and energy infrastructure projects you've probably never heard of. That network has a name, and the finance story behind it is one of the most interesting bets being made in 2026. Here's the thing about $120 billion. It sounds enormous, and it is, but what does it actually buy? Think about what an AI model needs to run, not just once, but every second of every day. Compute power, storage, electricity, cooling, network bandwidth to move data from one place to another at speeds most people can't even picture. Now multiply that by every AI assistant, every image generator, every autonomous agent being deployed in 2026. The demand for physical infrastructure, actual hardware, actual cables, actual power, is growing faster than the big tech companies can build it. That's the gap. And that gap, that's where our story starts. And here's what the investment reports won't tell you. The major players, Microsoft, Google, Amazon, they're building their infrastructure. Massive centralized data centers, billions of dollars of construction. But centralized has a problem. It's slow, it's expensive, and it leaves huge parts of the world and the market completely underserved. So what fills the gap? This is where the finance story gets interesting. There's a category of networks, decentralized physical infrastructure networks, that have been quietly building the alternative. Not one company, not one data center, thousands of individual operators around the world contributing compute, storage, and bandwidth and getting paid for it. Think of it like this. Instead of one giant power plant, you have 1 million solar panels on 1 million rooftops, all connected, all contributing, all earning. That's the architecture, and the money is starting to notice. And once you see how the capital is moving, you can't unsee it. Let's look at what's actually happening right now. Akash Network, a decentralized compute marketplace, is routing real AI workloads. Helium, originally built for IoT coverage, has pivoted into mobile data. Carriers are paying for it, and newer networks are emerging specifically for AI inference. The moment an AI model actually thinks, actually generates a response. That millisecond of computation, it has to happen somewhere, and whoever owns that infrastructure gets paid. This is not speculative. The infrastructure is being used. The payments are being made. The question for investors isn't if this market exists. The question is, who captures it? Here's what I think most people are missing. When the internet was being built in the late 90s, most investors bought the obvious names. The portals, the retailers, the consumer brands. The infrastructure plays, the fiber, the routing, the servers, those felt boring. They weren't boring. The people who financed the invisible layer made generational returns. We're at a similar inflection point right now. The AI layer is getting all the attention. The infrastructure underneath it, compute, energy, bandwidth, is where the structural opportunity is building. And DePIN is the version of that infrastructure that doesn't require you to be a venture capitalist to participate. You can run a node, you can stake a network, you can hold the token of the infrastructure that AI is going to need, regardless of which AI model wins. That's the finance story. Not the headline number, the layer underneath it. The smart money already knows this. Now you do too. So where does that leave us? $120 billion is moving into AI infrastructure. Some of it goes to the giants. Some of it gets absorbed into construction timelines and corporate overhead. But a piece of it, and it's a growing piece, is flowing into decentralized networks. The finance story isn't just who's raising money, it's who's building the thing the money actually needs to run on. And for the first time, that's a story where regular investors, not just institutions, can be part of the infrastructure, not just users of it. That's the story I'll keep tracking, and if you want to go deeper, the breakdown and the networks I'm watching are all in the column. Link is in the description. We'll see you there.